bring into the stream Mark Lehmann, JMP Securities CEO. Let's also bring in Dana Peterson, Conference Board's Chief Economist. We appreciate your both being here. Let me start with you, Mark, and I'm curious, when you say liquidity, 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 is that a signal that now is the time to keep your cash dry for the dip to buy?
Well, it's your signal that I think markets are going higher. And if you get opportunities to invest at lower prices, it's probably a good idea. But it's been a very long time where we've seen this kind of monetary and fiscal stimulus at the same time. At the very same time, vaccine numbers are going to go up substantially over the next 2 months. Case numbers, as you can already see, are dropping, as well as deaths are already dropping substantially. And that kind of good news, and hopefully a warmer spring, certainly not any more cold weather, but that kind of weather going into the second quarter, as well as better case numbers, I think is going to provide tailwinds to the stock market.
All right, we want to get to Jared Blicker here as we close in on today's closing bell. Jared, what are some of the movers that you're looking at into the close?
Well, I'll tell you what, the S&P 500 has turned green ever so briefly. You can see it's up 1 basis point right here. The Dow has been gaining throughout the day. It should be by its session highs here, and that is the case. Set for another record close, hit a record intraday high just a little bit earlier. And we saw some selling pressure in the mega caps earlier, still seeing some selling in Apple. The Buffett effect, we talked about that, trimming his holdings there. So maybe that explains why Apple's off just over 1.5%. But Amazon's up over 1%. Nvidia's down 2.7%. Some of the chip and software stocks stumbling a little bit today. I noted the breakdown in Apple below its 50-day moving average. So we do want to monitor that going forward, but we really haven't seen hardly any down days this month. In fact, when we opened just earlier, I was noting that even though the Dow was only off about 0.25% or so, that was a worse start to a day in February. So it just kind of gives you an indication of where we've been. Well, here's a sector action for today. Energy shares flying high, up 1.5%. Maybe some Buffett effect there too as he dips into Chevron. Also looking at consumer discretionary and financials. So kind of a broad-based leadership. We got some FANG stocks in there like Amazon boosting discretionary, and then the value and cyclical plays of energy and financials working out. To the downside, seeing the biggest drop in tech, and that is because some of those mega cap names like Apple, but also plotting some weakness in Tesla. There's a little bit of a breakdown today, so we'll keep monitoring that as well. Well, we started off the day heavily in the red on this, I'm going to call it the Tilray heat maps, cannabis heat map, but we've trimmed some losses. Tilray is down about 8%. Sundial Growers, that's Wall Street Bets trade, that's down about 21%. Probably going to be some questions around the cannabis stocks tomorrow in those hearings as well, guys.
And that does it for the trading day today. Again, we're seeing the Dow register another record close. Jared was mentioning some of the big movers here inside the Dow today. Chevron and Verizon, the two leaders, of course, the gains in those stocks coming after Berkshire Hathaway revealed new stakes in those companies. We see the Dow closing up just around 91 points, so off the highs of the day. S&P and Nasdaq, though, ending the day in the red. The Nasdaq off just around 0.6%. Taking a look at some of the sector action that we're seeing today, energy and consumer discretionary were today's leaders. The laggards, technology. Jared was mentioning the fact that we saw Apple under pressure, off nearly 2% today and falling below that 50-day moving average. And of course, investors are also digesting that better than expected retail sales number that we got out this morning, a 5.3% jump in the month of January. So that, of course, helping investor sentiment just a little bit. We want to bring back in our panel. We have Mark Lehmann and Dana Peterson. And Dana, let me go to you first, just in terms of another record close for the Dow today. What are you looking at, or how are you looking at valuations? Is there anything to be concerned about right now?
Well, I think that as long as investors believe that there's going to be another stimulus package or fiscal support package, and that the rollout of vaccines is going to encourage people to go out and spend, I think that's all good news. And certainly there's still a lot of upside here for the economy. We're expecting that by mid-year or maybe by the fall, that most people will have access to a vaccine and people go out and engage in in-person spending on services, that is, spending on in-person services. We're also going to be watching older demographics who are getting the vaccine first, as well as some other demographics like first responders and retailers, restaurant owners and workers. And those folks are getting the vaccine first to see whether or not they're going to go out and start this supercharging and spending that we're anticipating.
When as an economist, Dana, when you watch these kinds of things, is there a concern that people are scared and hold on to their cash and don't ignite the pent-up demand spending that everyone is anticipating?
Well, and there's some data out of that's been put together by Harvard and also Brown University that shows the share that people have been spending out of these stimulus checks. And with both the CARES Act and also with the second round of stimulus checks that were released in early January, people did save quite a bit of it. But what we're seeing, though, is that folks who are on the lower end of the income spectrum are spending more, which isn't surprising, more of those checks. And so potentially, that should be, if there is another round, that potentially there could be some targeting there. But the good news is that people are actually spending some of it. And we're seeing that in the retail sales data. People spent on restaurants and bars. People went out and bought furniture and electronics, and they continue to spend online. As we saw non-store retailers continue to pop up. And I think the most surprising element was the strength in department stores. So that shows that people were willing to go out there and buy at least goods and even some services in terms of eating and drinking places.
Mark, how would you characterize the consumer right now? Do you think the pop that we saw in January, that 5.3% jump, is that kind of a move sustainable?
Well, it's a big number, and I think probably the February, March numbers will be tempered by both the weather and some of that big number that we saw in January. So I don't expect the second quarter numbers, particularly with 70% of the country covered by snow, to be particularly strong. But I do think there is that kind of pent-up demand, and I do think there is that kind of pent-up emotion about getting back to normal. And hopefully we'll have that tempered by really good flu vaccine data and really good adherence to masks, et cetera. But I really, really believe strongly that that's going to happen. We're going to start to focus on getting kids back to school, which I think is really important. That's good for people's mental health. It's good for the kids' mental health. It's good for getting parents back to their jobs as well. All those things are positive, and we have a coordinated effort, I think, from the government, for the federal government for the first time, and that's going to be crucial to getting people confident that the economy is going to come back. And that's going to happen in the second quarter, and particularly in the third and fourth quarter, and I'm very optimistic for that through the rest of the year.
Well, what about the SPAC phenomenon? $82 billion last year, $26 billion just in January. I mean, I'm worried some people are going to get burned. Help us understand or avoid, getting burned by this phenomenon.
Some people are going to get burned. That's going to happen. But a lot of people are going to invest in some really terrific companies. And some people who are running these SPACs are really qualified, seasoned people who are finding some incredibly important companies that did not go the traditional route. So like any other investment, you got to do your homework. You got to make sure you invest in good businesses, and you got to invest in good management. This is going to have some headlines. This isn't going to be just a 2021 phenomenon. It's going to be for a while, but you're going to find some great opportunities. And there's some on the plate in the last 30 days that you're seeing. And there's going to be a lot more because, like you said, the front end of these SPACs is exploding. January, February will be the biggest month ever for those front end SPACs. But as you watch the next 12 to 18 months and as these unload into private companies, you're going to find some great opportunities. I just caution the overall public, this GameStop fever, unfortunately, will probably bleed a little into the SPACs, but you find the great companies, you find the great tech, healthcare companies that we've been a part of here at JMP. You're going to make a lot of money because this is not a one-trick pony SPAC, one-size-fits-all SPAC. There's some wonderful companies that are raising capital to find great private companies.
Dana, how are you looking at the mania that we've seen in SPACs? Are you finding any investment opportunity in some of those names?
That's kind of outside of my scope, but I think just the fact that people feel comfortable investing and building, these big, reservoirs of cash is quite optimistic, and that it's very positive that they're looking for opportunities to invest here with the expectation that the economy is going to do well.
When we talk about the economy doing well and that expectation, is there a chance we deflate ourselves, though, and we get the labor numbers? I realize they're looking back, but they do tend to sometimes, Wall Street reacts as it does to bad labor numbers because it thinks the Fed keeps going. But the rest of us hold on to our cash when the numbers are bad.
Well, I think the thing is that we're going to see some bifurcation here. You could see stronger GDP growth numbers, indeed, because you have these injections of fiscal supports and also the vaccine coming online. But the key thing is getting businesses back open, and also, and that means opening up opportunities for job growth. When we get these labor market data, we're still going to have probably close to 8 or 9 million people who are still not employed. And the key thing is for governments to feel comfortable and also people to feel comfortable with returning to normal activity such that in-person services can reopen and that people can get back to work, and also that businesses that may have cut back on employees will think about hiring to address that stronger demand. And that's probably going to come later on this year. So again, we might see GDP data look better than the labor market data, at least initially.
Mark, where are you finding opportunity in this market? Because I think there's some thought out there that a lot of these tech names, that it's overcrowded right now. Too many investors have been piling in to some of these at least larger cap names. Are you finding any reason to buy some of them?
Well, you got to be cautious at these kind of valuation levels, that some of these have gone way ahead of their earnings potential. And I think we're seeing some of that. We certainly have also seen some opportunities for some companies that have fallen back and haven't really participated. We talked about one on this show about a month ago, a company called Vroom, which is in the online auto business. There's a competitor called Carvana, which is one of the great stories of the last 12 months and how that stock has appreciated. But Vroom, frankly, hadn't appreciated quite as much. We pointed that out on this show. I think, like we said, my kids are not going to go down to the corner and buy a used car. They're going to buy it online. And that stock has appreciated considerably in 2021, and I think will continue to. I'd look at, as well as the online insurance market. There's a company called Lemonade, terrific online for renters, and my kids have Lemonade insurance. But there's a company called Root, which went public less than a year ago, which hasn't been caught up in the hype and hysteria of some of the highest multiple stocks. That is a terrific company, has terrific management that you want to play in. I think these large markets are not going away. Some of the valuations have gotten ahead of themselves. But if you look at the behavior of the 20 and 30-year-olds, they're not going to have an insurance agent. They're not going to bank at the corner bank, and they're not going to do the typical things that we did through the last 20 and 30 years. It's all being revolutionized, and being a part of that wave is why tech is so important and explosive, and that's not going to change. Valuations may change, right, but the consumer behavior hasn't.
Right. Mark, just got to point out, we're not kids, and there's a 54 Studebaker online for sale that I've been keeping an eye on. I want to go to Jared real quick to get some final thoughts.
All right, let's take a look at the charts here on the Wi-Fi Interactive. I'm looking at 2 days of U.S. dollar strength. Now, this is heavily weighted toward the euro and the British pound, but still, we've seen a stronger U.S. dollar across the board. And then that ties into the weakness that we've been seeing in gold futures. I'm going to go to a 10-year chart here and just point out that we are at a critical level right around 1790 to 1800. That was an old resistance level, and it's going to possibly be support, but breaking down a little bit. If we break down too much lower, probably going to get some follow through. All of this makes the move in Bitcoin all the more impressive because U.S. dollar strength not putting a dent in Bitcoin gains, now above 52,000, guys.
Jared, I don't think many people are mad at that. Let's say thank you to our guests for joining us today. Mark Lehmann, JMP Securities CEO. Also, thank you to the chief economist from the Conference Board, Dana Peterson. All the best to you.